I'm going to run through a few housekeeping items before we get started. During today's webinar, you are going to be in listen-only mode, so you don't need to worry about any background noise on your end, but we will open it up for Q&A at the end of the presentation. I do encourage you to ask questions throughout the presentation, and then we'll do our best to answer those at the end. As you can see on your screen, to ask questions, you're just going to use the GoToWebinar panel that you can see to type those in. We will have a couple of live interaction polls throughout the presentation, which we also encourage each of you to participate in. Next, I would like to go through Lauren's bio. Lauren Prosser is the Director of ProfitCents Professional Services. Within PPS, Lauren's specific expertise at an organizational level is in working with mid-market and large public accounting firms to develop and retain talented accounting professionals, construct and optimize client service plans, facilitate strategic planning, and to form, implement, and execute business development and growth strategies. Okay, Lauren, I'm going to go ahead and turn it over to you to begin.
Great. Thank you, Jessica, and thank you, everyone, as Jessica said, for attending today. I hope that you will find today's session valuable and applicable to your firm. As Jessica said, my name is Lauren Prosser. I am the Director of Professional Services here at ProfitCents, and specifically work with firms to help them kind of re-envision and realign their client service strategy with the needs and priorities of the clients and target markets that they serve or are looking to serve. Today's session, Growth Through Refinement, focuses on, essentially as its kind of subtitle directly suggests, how to expand your reach by narrowing your focus. Okay? So we're going to have a 5-part session today. And essentially what we're going to look at is how to tackle the 3 greatest issues, at least from my perspective, in the accounting industry today. The first, and I would put these in order, is leadership development. And we're actually not going to focus directly on the first and second of the 3 issues, but indirectly what we talk about today will support them. Okay? We're going to focus most directly on the third of these issues. Okay? But the first issue is leadership development. The firm of the future really has a core competency around, or will have a core competency around, talent and leadership development of its people. People work up or down to how they are led, and as the cliche goes, people can't be what they can't see. So leadership development is huge. Tied very closely to that is succession. If you look at the fact that 64% of partners in accounting firms are 55 years or older, that coupled with the fact that the attrition rate at the senior and manager level in many firms is excessively high, anywhere from 25 to 35%, that has really created a real, I guess I would say, crisis in the industry. Looking at, for especially middle market firms, local and perhaps regional firms as well, who's going to take over their firm 5, 10, 15 years down the road? And are those individuals well suited to, educated to, and have they been coached to serve kind of the evolving needs of their clients and meet the needs of the industry, of the profession? Okay. What we're going to focus on is the third of these issues, and that is winning new clients. Your competitive advantage as an accounting professional and as a firm really lies in your ability to help clients make money, save money, and or add value to their organization. As we all know, your technical skills and your high level of client service as a firm is really a given. So today we're going to talk again about growth through refinement, how to tackle that third issue, winning new clients. And I would say re-engaging, winning over again, your existing clients, the existing clients that your firm is currently serving. So both from kind of a marketing and a business development perspective. Growth through refinement. So let's kind of further define that. Growth itself is really a successful marriage between the execution of strategy and the reception of that strategy by your firm's target audience. Your firm's strategy is basically your playbook. And that playbook is a culmination of the insights that you've gained through access that you have to timely information and understanding of your firm's core strengths. Who is it that you are really best suited to serve? Why is that? And how do you communicate that to that audience? Your strategy, again, that playbook, must address 4 things. Who? Again, who is your target audience? Who is the delivery team responsible for working with that client? What is the scope of your services to be provided? How? Number 3, what is your platform for delivery? How will you actually be delivering those services? What is the medium of your message, et cetera? And why? why probably being the most critical, what is the scope of the value that you're providing, and how does that align with your overall strategy and the needs of that target audience? Okay. So we're going to look at really two of those four elements of strategy, who and why. And focusing on the who element, looking really at organic growth as opposed to growth in the accounting industry resulting from mergers and acquisitions. The who is really one of the most successful, tackling that is one of the most successful growth and differentiation strategies for public accounting firms. Really through better aligning or narrowing your focus through the use of industry verticals and niches, as well as related service specializations. So what we're going to talk about basically is how your efforts can better lay a foundation for deliberate and intentional growth. Deliberate and intentional growth is the only type of sustainable growth, as we know, in the industry and outside as well. Okay? So really looking at your ability to go beyond the delivery of information to the delivery of solutions and ideas to your clients. So specifically, we're going to start off with a little bit of background on the industry. What are clients focused on? What do they need? What is their perception of value? Where are their opportunities? Just overall, we're going to look at certain industries that are growing quickly, industries that are most profitable, et cetera, kind of a macro level. And then we're going to take a more of a micro level approach and talk about your specific firm. How do you profile your existing client base to figure out what your core competencies are and who you're best suited to serve? And then how do we expand our reach with that group of clients? The most profitable services that you can introduce as an accounting firm are those that are the most closely related to the services you're already providing. So the most profitable services you can introduce are those most closely related to services that you're already providing. We'll then continue that discussion about where to look and what to watch for in terms of industry trends. We'll talk about how to research an industry and create alignment between what you learn about an industry and what your core competencies are. So again, kind of backing out now again to that macro level look. And then we'll talk about launching a niche, kind of a step-by-step approach to launching a niche. So first, part one, your industry and your markets. A little bit of background here, some supporting research and surveys. Looking at the PCPS, a private company practice section of the AICPA, their 2013 CPA firm top issues survey. And you'll see that the responses here are broken down by size firm. Okay? And it looks at change in priorities or areas of focus between 2011 and 2013 in these firms. Sole practitioners, firms of 2 to 5 professionals, and then the third group there, 6 to 10 professionals. And you'll see circled or highlighted there in blue for all of those size firms, in those top 5 areas of focus or critical importance is bringing in new clients. Okay? Retention of existing clients is also key for the sole proprietor size firms. Okay? For firms of 11 to 20 professionals, bringing in new clients is actually the top area of focus, the most critical area of focus. And then for firms over 20 professionals, our larger regional and, of course, national firms, looking at the bringing in new clients is the second area of importance, okay? Right behind partner and kind of leadership issues. Let's look now at a survey that was conducted by a group out of the Chicago area, L. Harris Partners. L. Harris Partners goes in and conducts for public accounting firms loyalty surveys. So beyond satisfaction, they conduct client loyalty surveys. And they garner all kinds of incredible insights about where firms can better serve the needs of their clients. An incredible group to work with if your firm has any need or interest for that sort of thing. Each year they publish a growth prospectus survey. Okay. This looks at essentially about 600 different accounting firms, what their, again, priorities or areas of focus are. So another group, kind of the same intent as the previous survey that we saw. So in green and blue, we have what firms are relying on very heavily and fairly heavily, all the way down to, in yellow and red, what firms are not prioritizing or relying on as much to at all. Okay. So you'll see of most critical importance or focus there at the top, selling more of our existing services to current clients. Again, that's going to yield higher realization rates. We're not reinventing the wheel. We already have those clients on board with us, so there are no additional expenses in terms of bringing in a new client. And hopefully we can capture services that are closely related to our core competencies, what we're already doing. Okay. In looking at the second box there, the second kind of group of survey results, looking at how they're going about obtaining those new services, capturing those new services, or approaching clients about those new services, and where they are spending enough time or not enough time. So most firms feel like they're not making enough time to have conversations with their most important clients about their goals and priorities. We're going to talk about how to work those into conversations, those kind of critical discovery questions. Also not spending enough time asking clients for referrals or understanding their unmet needs, nor developing specific client service plans. So we're going to talk about how to incorporate elements of all of those. What I'm not proposing is that you leave today's webinar and reinvent or reimagine everything that you're doing. But hopefully you can introduce certain kind of kernels of what we talk about today and grow from there in terms of refining your areas of focus. One of the final surveys here before we start, this coming from CPA Trendlines, a great site with a lot of wonderful articles. Rick Telberg, the publisher there, does a wonderful job, great survey content as well. He basically released a survey called the Marketing Plans of Best Firms, highest performing firms, as measured by revenue growth. And when he asked about their areas of focus, what they're going to do differently next year versus last year, of the four most frequent responses here, we see looking at marketing or better positioning their niche and specialty areas and increased targeting. You'll notice that those responses didn't show up for low-performing firms. So that's really a great differentiator. Jim Collins put it well in his book, Good to Great. Managing your problems can only make you good, whereas building your opportunities is the only way to become great. So by narrowing your focus, you can actually increase your relevance and expand your capabilities. A niche-driven strategy does several things. It boosts profitability. It refines skill sets. It allows your people to be better at what it is that they're doing, refining skill sets. It allows them to better concentrate their time, and it allows for processes to be replicated. If you think about kind of supporting marketing and business development plans, not nearly enough firms have marketing plans or client service plans in place to support their larger client service objectives. 76% of firms under $10 million in annual revenue do not have a formal marketing plan. Just over half, 56% of firms between $11 and $19 million in revenue don't have a formal marketing plan. And again, marketing plan thinking about prospective clients. So about 3/4 of firms under $10 million don't have one. 56%, just over half, of firms between 11 and 19 million don't have one. And then 37% of firms over 20 million don't have one. And I would say that would be probably the most alarming of those three metrics, would be the final one, just because of the size and scope of those firms over 20 million. Okay. So let's talk about, now that we've kind of gone through some supporting evidence about what firms are focusing on. We know that firms are kind of narrowing their focus, but why are they doing that, and how are they doing that? And how are they measuring the kind of results or outcome of those efforts? So let's talk about the types of niches, first of all. Now, a niche might sound very formal, very structured, and in fact it can be, but you can also, again, introduce this on various kind of scales. So that's what we're going to talk about today, again, how to introduce kind of pieces of this refinement into your overall approach. Basically, there are two types of niches, and niches are basically just a specialization that you have in working with a core group or providing a core type of service. So they can be functional or service-specific, state and local tax or SALT, forensic accounting, technology consulting, cost segregation studies. Or they can be industry-specific, okay? Construction, not-for-profit, healthcare, manufacturing. So those are the two overall types. The only type of successful niche, or the type of niche that will succeed, is one built around what your market wants or needs. And another thing to think about, I work primarily with kind of mid-market and larger firms, but I also consult with smaller firms, local firms, firms of 5 or so professionals. And oftentimes when I introduce this concept of specialization, I'll get pushback from some of those smaller firms saying that, well, we don't really have the resources to specialize. And my counter argument to that is, well, actually a well-executed niche, or specialization if you want to use that word instead, a well-executed specialization can actually be a great normalizer between firms of different sizes. Okay? Small firms are actually typically more nimble. They're able to react faster because there aren't as many moving pieces. So small firms are typically more nimble, and that can certainly yield certain advantages. A successful niche can not only help you compete up in the marketplace, but it can do other things. Besides just competing up against larger firms, it can allow you to be or can be really a major attraction factor in recruiting talent. It can lead to a more refined L&D or learning and development approach within the firm, which could tie into lower attrition rates. It also helps you make better use of your marketing budget and your technology budget. So these types of niches can be applied to a wide array of industries and are really driven by the skill sets of the professionals in your firm and, again, what your market needs. And it allows you to have a point of differentiation that's different than all of your competitors. Firms that are really successful at niche marketing or niche, kind of an overall niche approach, I would say have at most on the high end, maybe 60 to 70% of their fees coming from their niche or a handful of niches. Many firms, however, that are successful with a niche strategy can have 25 to 40% of fees coming from their niche. I would say that you probably don't want to enter into a niche or real specialization if you can't have at least 10% of firm revenues or fees coming from that niche. And really there are two kind of overall things that niche marketing can achieve. It makes marketing less costly, and it really allows your clients like to hire people that they perceive as experts. So it allows you to instantly build credibility. So the idea is thinking about relevance, not just in terms of industry knowledge, but also in terms of how recently you have learned additional information about that particular group, sector, et cetera. What have you learned? And this is a question that you should be working to answer on an ongoing basis. Forget about the last year. Replace that with whatever time period, month, week, day, but to make yourself more valuable to who it is that you feel that you're best suited to serve. And does that audience, does that group know that? Do they know what it is that you've done to be ahead of the game or ahead of the curve and how that can directly benefit them? Again, that should be communicated on an ongoing basis. So let's talk about profiling your client base. Okay. In the book Leading Firms by David C. Coleman, he talks about the three key elements of strategy. Okay. One of those is a client service model. Okay. So one of the three key elements of strategy that he talks about. One is a client service model or client service plan that keeps the firm, meaning the accounting firm, keeps the firm doing the right things in the right ways for the right clients. Fairly simple in sound, but also very profound. So your firm doing the right things in the right ways for the right clients. That's one of the key elements of strategy, is that client service model that achieves exactly that. And this comes from, again, knowing where your firm is best equipped to compete and having a clear and accurate definition of your value proposition to that client. So let's talk about how to first look within your existing client base to figure out who you're best suited to serve. So this discussion or evaluation really has to begin within. It doesn't begin with looking at what industries are growing fastest in your area, where other firms are specializing. It begins with kind of an inward reflection. Who are you currently serving and how purposeful is that? So I would strongly suggest, and if you only have one takeaway from today's session, I would say this slide is probably it. I would strongly suggest that you start off by profiling your existing client base. Profiling actually your ideal client by looking at your existing client base. So first, segment clients. The overall idea here is that in order to be good at marketing, we have to be good at business development as well. And in order to really know who we're best suited to serve, we have to adjust that target audience around our core vision and service strengths, as opposed to the other way around. Okay. So first, segment clients. I would say you can segment clients in a variety of ways. I'm going to list many of them and then come back and repeat the ones that I feel are probably the most important to look at. So here are some ways that you can segment your clients. One, you can segment by industry. And I would recommend that you do more than just one of these. You look at segmenting your clients in multiple ways, because there are going to be more and better kind of observations or insights when you look at a cross-section or multiple different kind of vantage points when evaluating your client base. So one way to segment your clients is by industry. A second is by size in terms of their annual revenue. So number 2, size. Number 3, the service or services that you're providing. Number 4, how they became a client. Is it a result of some direct marketing that you did? Was it a referral from an existing client? Number 4, their location. Number 5, their location. So geographically, where are they located? And if you're a firm with just one office, that might not be as relevant. If you have multiple offices, you're serving clients in a greater geographic area, that would be. Number 6, fee structure. Is this client on a quarterly retainer? Are you billing them hourly? Is it a flat fee? Okay, so fee structure. Number 7, the stage in their business's life cycle. Are they looking at some exit strategy or succession planning? Are they in a growth stage, expansion? Are they a startup? So 7 would be stage in their business's life cycle. 8 would be gross and net fees. Gross and net fees. 9 is growth. So basically increase in revenue with that client year over year. That's one way to measure growth. So that's kind of 9A, growth by fees or revenue. And 9B would be growth by additional services introduced to that client year over year. So number 9A, growth by revenue or fees. 9B, growth by number of services. 10 would be realization. How profitable are those clients? And then 11 would be retention. Here are what I think are some of the most critical. Services provided, gross and net fees, growth, again, as measured by increase in revenue and increase in number of services, realization, and retention. And what you want to look at is, where are you keeping clients? So where are you keeping clients? Are there certain industries where you're really retaining clients for a long period of time? On average, how long are you retaining clients per industry? On average, per industry, how many, or by industry, how many services are you providing per client? How many services per client of clients between, let's say, 10 and 20 million in revenue? Okay. So look at retention by those different metrics, okay, by fee structure, by industry, by number of services provided, by stage in the business's life cycle. And you should start to see some overlaps. This is a very simple way to help you figure out who it is that you're best suited to serve, how they became clients. Again, where are we retaining them the longest? The clients who are referrals tend to stay with us longer than those who come in from some kind of speaking engagement or marketing effort of the firms. Okay. So where are you keeping clients and why? Keeping in mind that your firm can't be everything to every client or potential client, so it's important to know where you are the most successful. So you want to segment your clients, and then you want to think about how kind of purposeful or careful you are about bringing new clients in. Do you have a client acceptance program? It should be a two-way street, not just the client qualifying or prospect qualifying how well suited you are to serve their needs, but you also evaluating the same. Firms with a strong client acceptance program actually have anywhere from 10 to 15% higher realization. Okay. So firms with a strong client acceptance program actually have 10 to 15% higher realization because, again, they're better matched with those clients. They know why they brought those clients in. They know what those clients' needs are and exactly how to provide those services. So 10 to 15% higher realization is seen with firms that have a strong client acceptance program. And one more time in terms of segmentation, we want to look at that by services provided, gross and net fees, growth as measured by increase in revenue and additional services as well, realization, and then retention. Retention really alongside of all of those things. Okay. So we identify our core strengths. We assess support activities. How are we communicating with those clients? What are we saying to them? Are we doing any thought leadership in those industries where we're retaining clients? Okay. How frequently are we communicating with them? How frequently do we respond to them? Who in the firm is working with those individuals or those clients? Okay. Are certain engagement teams seeing clients retained over a longer period, and why is that? Okay. So looking now at a couple of key metrics that you should also be evaluating. Number of cross-selling opportunities identified versus the number one. Essentially, you want to look at this by partner and industry or service groups to see who in your firm is really successful at cross-selling or identifying client needs. Okay. Where are you keeping clients? And again, how purposeful is that client service plan? There are really 4 objectives of any meaningful client service plan. It must have the foresight to identify opportunities. It must pair those opportunities with internal resources and expertise. It must drive value. And it must focus on relationships, not just deliverables. So a few questions to ask yourself of your client base. Which of your clients are underserved? For clients that you're providing less than 2 services to, I would start there. Why are we only providing 1 service to those clients? Okay. Should it be that perhaps we should fire some of those clients? Okay. Or are there opportunities being left on the table? So what clients are being underserved and why? Looking at what systems do you have in place to facilitate opportunity identification. How have you trained firm members to identify opportunities? How do those opportunities get communicated back up the chain? How are they followed up on? Are they a part of your weekly or monthly partner meetings or pipeline review meetings? How are they tracked? Okay. How do we communicate with the client and how quickly does that occur? How do we track client responses? Okay. Of your current service offerings, which are the most profitable and why? Which are the least profitable and why? What are holding you back? What's holding you back from getting to the next level in terms of unprofitable services or clients? Why are you keeping ties with both? And thinking about when you lose out on an opportunity, a cross-selling opportunity, basically 3 things happen. When you identify that there's a need for a client and you fail to provide an additional service or value around that need, you lose out on the revenue. That's pretty straightforward. You lose out on a chance to strengthen that relationship, and you open the door for a competitor to come in and provide that service. So that actually leads us to the first poll. And Jessica, if you want to go ahead and launch that first poll.
Yeah, thanks. Let me go ahead and pull it up here. All right, so for the first poll, what % of businesses over $10 million in annual revenue use multiple CPA firms? 10 to 20%, 35 to 40%, or 60 to 65%? I'm going to go ahead and give everyone just a minute here to respond. Okay, just about 10 more seconds here. All right, I'm going to go ahead and close the poll and show the results. We had 43% choose 10 to 20%, 43% chose 35 to 40%, and 13% chose 60 to 65%. I'm going to go ahead and turn it back over to you, Lauren.
Okay, thank you, Jessica. So we have a smart group with us today. We actually, I know there's a tie between the first 2 options there. The correct answer actually is for businesses over $10 million in annual revenue, and it's coming from that L. Harris Partners group I mentioned earlier. 35 to 40% of businesses over $10 million in annual revenue use multiple accounting firms. And the #1 reason for that has nothing to do with any independence consideration, etc. It's lack of awareness. Those clients weren't aware that the initial firm that they'd been working with provided whatever additional service it is that they sought out another accounting firm to provide. So lack of awareness was the first issue, followed by perception. Perception that that initial firm that they had been working with didn't have a specific expertise or niche or presence in whatever additional area it is that they sought some guidance from the other firm. So it's a pretty alarming statistic, and again, what that leads to or directly ties to is money being left on the table and relationships being made more vulnerable. So really, again, look at any client in terms of those average number of services per client. Look at any client that you're providing fewer than 2 services to and assess whether it's worth keeping that client on board or if there's an opportunity to grow. 25 to 40% of new business, i.e. new revenue, that top firms generate comes from additional work with existing clients. Of course, as your firm is more closely entwined with a client, your firm is more attuned to their needs and can address a greater spectrum of their needs. That not only boosts revenue, but it also helps to foster stronger relationships, tying into better retention rates. Okay. All right, so let's look at part 3 here, where to look and what to watch for. $1 million question, where are the new clients? Okay. This coming from also from CPA trend lines, looking at areas of firm specialization. you'll see that this is both by service offering or functional area, functional niche, as well as industry niche. Okay. So the survey here asked firms if they were planning to specialize, and if so, in what area. 88% of firms said that they are planning to specialize in some way. Overall, the highest area of response by far was additional services, specifically consulting or advisory work. Looking at this now coming from Accounting Today, from last year's Top 100 report, Top 100 Firms report, the percentage of firms, Top 100 firms, increasing their business with these types of clients. Okay, 82 of those Top 100 firms responded. The industry area with the greatest growth seen was in manufacturing, followed by mid-sized business, not-for-profit organizations, technology, real estate, professional services, healthcare, and then construction. Many of those you also saw here, construction, not-for-profit, manufacturing, etc. Looking now at, from our own data, from the data that we've aggregated from other accounting firms or from accounting firms using our ProfitCents tool, the financial statement data that they've entered. Looking at most profitable industries. Okay, this is coming from an article we published called Industries to Watch. So what we're looking at here are industries, again, that are the most profitable for various reasons. Some of these industries, like accounting firms, legal services, dentist office, are traditionally going to be on, perennially going to be on list of most profitable industries because they are really structurally set up as mature industries. Many have lower overhead, and they have less reliance on kind of a point in cycle in the economy. In other words, they are services that get maintained even during downturns. But what you want to look at beyond just what industries are showing up on this list would be taking a step back and thinking about, okay, these are profitable industries, potentially industries with cash on hand or cash to spend. What types of services might be beneficial to them? Perhaps value enhancement services, cost segregation services, studies, transition planning, okay? Thinking about what the ownership structure might look like in some of these businesses, dentist offices, etc. Again, succession planning, management buyout or exit strategy advisory, expansion evaluation for many of these as well. Okay. So looking at industries and then services that would pair well with the needs of these industries. This is now looking at not the most profitable, but the fastest growing industries in terms of increase in revenue from that same Industries to Watch article. So these industries had really dramatically higher growth rates than the average growth rate in terms of sales growth for private companies overall. That average growth rate for private companies overall was about 9%. Some of these industries, like manufacturing, played a really pivotal role in the economic recovery. So it's no surprise to see them on the list. Others, like the machinery equipment wholesalers, machine shops, etc., might be kind of supporting industries. Again, so there's relationships that we see here. But looking at services that might be needed in high-growth industries. Internal control design, so helping with internal controls, designing those controls. Risk management review, management coaching, HR or staffing considerations or coaching. Financing strategy, helping to finance some of that growth, assisting with resource allocation, capacity planning, okay, what's their ideal kind of operating size or range. So capacity planning, cost control modeling, and value enhancement strategy I would say would also show up here. So now let's kind of segue over to a discussion about how to actually research an industry. So those are industries that are profitable, that are growing, and also growing quickly between those two lists. Well, let's talk now about how to research an industry. Specifically, we're going to talk about researching an industry in 7 steps. And this is something that I teach many of the firms that I work with. So for those of you who are firms that I consult with on ProfitCents or coach in a different capacity, this part might look a little familiar. So how to research an industry in 7 steps. This actually ties in with our industry data report, part of our ProfitCents suite. It's a report that provides firms with access to industry data on about 1,400 for-profit industries, and on the not-for-profit side, about 650 nonprofit sectors. It allows those firms to really research an industry, or even to use that data or that report as a deliverable with a prospective client, or in thought leadership pieces, etc. In that report, again, 7 things that we look at. I'm going to switch to the following slide. so we can take a look at that report. Now, if you're using another data tool, you might be able to find some of these elements or even several of them on the report that you're using if, again, you're using something outside of ProfitCents. This, what we're looking at here, comes directly from our ProfitCents industry data report, however. I would say overall, before we get into these 7 steps, when you're researching an industry, there are 3 very straightforward questions that you need to be answering. Okay, I would write these down because they're not on the slide. The 3 questions that you need to answer when researching an industry are as follows: whether or not you use ProfitCents. Number 1, and this is what we're going to answer through these 7 steps. Number 1, million-dollar question, what is going on in the industry? Okay, so number 1, what is going on in the industry? The 7 steps we're about to walk through will answer that question. Number 2 involves you taking a little bit of a step back from that data, from that research directly. Number 2 is, how does that environment, how does what's going on in the industry, or the answer to question number 1, how does that create a unique set of opportunities or obstacles, okay, for someone in that industry? So how does that environment, how does what's going on in the industry create challenges or opportunities? How does it create certain decisions that someone running a business would need to answer? What might the timelines for some of those decisions be? So thinking, how that environment would impact someone in the industry day to day, as well as overall big picture strategically. And then 3, why are you and your firm, why are you uniquely positioned to serve the needs of that industry? What resources do you have? What expertise, et cetera, that is uniquely aligned with what's going on in the industry? Why can you help that client more so than anyone else in your area to capture that opportunity, plan for that challenge on the horizon, et cetera? So 7 things to look at. In our report, or if you have this available through another source, what I would recommend, the first thing that you would do would be to start off with a common size statement. A common size statement takes financial statements and shows them in proportional or relational terms. Every income statement account is shown as a percentage of sales. Every balance sheet account is a percentage of total assets. And what I recommend that you would do is start off with your most recent period of data in the common size statement and look at where money comes in the door, where revenue is generated in this industry. This is an excerpt from a report for the full-service restaurant industry. So looking at a breakdown between food sales and beverage sales. Okay? Revenue generated from, again, food sales versus that generated from beverage sales. Then looking at their expense structure, their cost of sales and their overhead expenses especially. Looking at the breakout between direct labor and G&A payroll. Okay? Looking at food expenses versus beverage expenses. So where money is coming in the door, where it's being spent. And then on the balance sheet side, we would look at the asset composition of the industry. Does this industry carry a lot of inventory, or are they receivables heavy? What about investment in fixed assets? And then what does the liability or debt structure look like on average for the industry? I would then back up and compare that to the prior year or the prior period and look at trends in the industry. How has that shifted or changed over time? So number 1 would be the common size statement. Number 2 would be the current year and prior year comparison. Okay. The third thing that I would recommend that you look at would be sales growth, sales and profit growth. Again, kind of standard blocking and tackling drills here. So what does change in revenue and profitability look like year over year? Okay. Really the core of any business's financial health is their ability to drive revenue or sales and control costs to generate a profit. So looking at how successfully other businesses of similar size and scope to your client or prospects have been able to do that should provide you with a great deal of insight. Okay. Next up would be looking at margins. Has the industry improved its ability to control costs again and generate a profit? Okay. You can always go back to that common size statement to look at specifically where that has occurred. If we are seeing a boost in their gross profit, is it from reduction in labor cost or supplies or whatever the case may be? Next would be employee profitability. Number 5 there, profit per employee. 6 would be the elements of the operating cycle, inventory days, receivable days, payable days. And then last, but certainly not least, would be industry-specific metrics or KPIs. Okay. Those industry-specific metrics define how other businesses like that clients or prospects measure success. That should yield some of your most meaningful talking points. In any instance, just like I said, there are 3 questions you need to answer. I would cap your talking points here that you pull out of the report to 3 as well. I would say that the best consultants are the best listeners and the best filters. They provide, you're not just a trusted advisor, but also a trusted filter. You mine through all of this information that's out there, and you're able to show the 1, 2, or maybe 3 things that could be most pivotal, most transformative to a business in that industry, and then discuss from there what they should be doing about it. So this should lead essentially to discussion. Okay. Questions that you can ask, like, what is your business doing to address this trend that we're seeing? What do you plan to do differently in the future based on that trend? How have you tried to increase your margins? Has it been in line with what we're seeing here in the industry? Okay. What about your profit forecast, et cetera? So you can kind of shift from a historical focus about where their business in the industry has been to where it is now to where that they're going. Again, a great way to initiate a discovery process. Okay. So aligning your messaging from here. Once we've researched an industry, now we really want to look at how to align our messaging. Okay. Let me erase the pen marks there. So again, what's going on in the industry? How does that environment, as we talked about, create challenges, provide opportunities, and pose questions or challenges that a business owner must manage or address? And then why are you uniquely positioned to serve the needs of that industry? Okay. So at this point, let's see, Jessica, I think we have another poll.
We do? All right, let me go ahead and get that launched here. On average, what % of CPA firms' annual revenue is recurring? 25%, 40%, 55%, or 85%? I'll give everybody just a moment here to go ahead and get that answered. Okay, let me go ahead and close that and share the results. All right, we had 5% choose 25%, 20% of the group chose 40%, 32% of the group at 55%, and 42% at 85%.
Okay, perfect. Thank you for those of you who participated. The correct answer there is on average. Again, the question was, what percentage of an accounting firm's annual revenue is reoccurring? And the correct answer to that was 85% of an accounting firm's annual revenue is recurring. So what that means is firms have to generate or find at least 15% of revenues each year, additional revenue, just to stay flat. And I would argue that not many of you have a goal, if any of you have a goal of just staying flat for this year. So what that means is you really have to be kind of fine-tuning or refining your approach to marketing as well as business development. So revenue coming from new clients and existing clients. Again, today we're focused on really how to do both. So let's talk now in our last portion of our session about how to go about launching a niche, kind of step by step. So we talked about the fact that a niche or specialization can be functional, i.e. service specific, or it can be industry specific. We talked about the fact that you really need to first profile your existing client base. We talked about the different ways to do that, to segment your clients, growth in terms of additional services or revenue. We talked about looking at how they were brought into the firm, the realization for clients, all of that alongside of retention rates. And we talked about looking at who in the firm seems to have the most success with identifying and capturing cross-selling opportunities. And then we talked about how to begin researching an industry, looking at industries with high growth rates, profitable industries, et cetera, and then taking a step back to think about what types of services would tie into or be valuable to someone in a high profitable, very profitable industry or a high growth industry. Things like for high growth industries, we talked about help with internal controls, helping design internal controls, helping with capacity planning, staffing considerations, et cetera. And then we talked about specifically researching an individual industry and kind of tailoring your messaging. Okay. I can say without a doubt that firms that I work with that are the most progressive really focus on two things, and this would be my own wording. But they focus on having better insights, and that's what we've talked about up to this point, how to know more about who you should serve and how you can communicate with them. So they focus on insights and agility. There are two ways, generally speaking, that an accounting firm can be structured. An accounting firm can be structured just like a niche can be structured by either service line or service offering, i.e. your A&A group, your tax group, etc., or by industry vertical. Okay. Firms that I work with that are the most progressive and have the greatest agility built into their structure are typically those that are structured by industry vertical. The reason for that is that facilitates or leads to kind of cross-functional teams. You have a group of folks who have a specialization in manufacturing, not-for-profit, healthcare, etc. And within that industry vertical, you have folks who are able to assist with maybe benefit plan consulting, IT considerations, tax, cost seg studies, A&A, etc., valuation, lit support. But they all have one thing in common, and that is they have expertise in the industry, and they are, as a group, serving that particular segment of clients. What is really the hallmark or differentiator for firms that are structured by industry vertical is that there are fewer missed opportunities because there's greater communication. That model really provides greater agility because it enables communication at a faster pace than the service line structure. So in looking at launching a niche step by step, you want to think about 4 factors. First is demand. Demand within your current client base as well as a new target market, so demand. Number 2 would be revenue, ability to generate revenue. And is that revenue going to come from ongoing types of services or annuities or one-time services? Okay. 3 would be service capability. Thinking about your existing firm members, personnel, are they currently trained or able to provide those services that that market would need, or they need additional training and coaching? If you have to hire new staff, would those individuals be fairly readily available in terms of new talent, or would that be a difficult search process? And then 4 would be business development, looking at whether or not there's a clear value proposition in that niche, the ease of differentiation that you would have from other firms, and what would be expected from that industry. Okay, so thinking about several questions here. We have a series of questions that you would want to ask yourself and of your firm at a strategic level before proceeding with a niche. So let's say that you segment your clients, you research industries, and you find an overlap between industries growing in your area, or maybe an industry, and that same industry being one that you're already serving and really retaining clients in. And in addition to that, have an average of 2 or greater services offered or provided per client. At that point, if we want to proceed with the niche, we can ask questions like, is that niche consistent with our larger goal and vision? Is there sufficient need or demand from the niche? What is the trajectory of the industry? Where is it going? How will that shape future needs? Again, thinking about services that would be needed. At what point will your firm's initial investments in developing that niche be returned to the best that you can project? Is there a reason that others haven't explored that niche? Okay. What are the barriers to entry? How do we reach that niche, that target audience? Who are their centers of influence, etc.? Do you have the necessary resources, staff, intellectual capital, technology, etc., to support that initiative, or would you have to acquire some or all of those things? What does your ideal client in that niche look like? So thinking about specific industry within maybe a larger industry umbrella, specific size company, stage in the business's life cycle, number of locations, etc. Who would be your primary kind of point of contact there? What services would you offer, and how will you prioritize those services? How will you structure your fees or your pricing for those services? How profitable do we anticipate that niche being, year 1 and then beyond that? And how are we on an interim basis going to track progress with establishing our presence in that industry? What other markets might we pursue, other industries might we pursue as an extension of that niche? Again, the most profitable services you can provide are those that are most closely related to the ones you're already offering. The most profitable industries you can explore are typically the ones that are most closely related or entwined with the ones you're already serving. And then how will you structure the team, the delivery team? So again, as kind of a recap for launching the niche, we want to first conduct an internal audit, assessing or evaluating our client base, segmenting our revenues and retention, clearly outlining our firm goals, identifying firm resources. On average, accounting firms invest between 1.5% and 4% of annual net revenue on marketing. But not just marketing we want to look at. We also look at, again, technology, staffing, that ties into letter D there, intellectual capital. Then we want to make sure that we have alignment between all of those things. We want to evaluate who else is already in the market, our competition. We want to assess that market potential. That can be done through surveys, that can be done through discussions with other firms, centers of influence, direct conversations with those in the industry, et cetera. And then we want to analyze those market trends, forecasting their needs and, again, opportunities. Okay. Beyond that, last few points here, we want to identify or select a niche leader, and then develop a plan for that niche, which includes a clear definition of what that niche is and isn't, what the target market is, at an organizational level as well as an individual level, so who in that organization will we be targeting, our services and what our budget is, what our revenue and growth goals are, timelines, what resources we need to support these activities, what our channels of communication and accountability, I would add to that, would be, staff needed, and then what incentives we'll have in place to, again, help kind of promote growth in that particular niche. And then taking it back to a client perspective, looking here at 34 sources of client value. Okay. So what are your clients looking for? And then our final point here would be, before we go to questions, beyond what our clients are looking for, how do we incentivize staff? In blue are the ones that I think are most critical. Basically, how do we reward staff for identifying opportunities to expand your reach with and beyond your client base? Really reinforcing how important it is, reinforcing for the staff to make sure that those client needs are met and expectations are exceeded. So bringing staff members, letter C, inclusion and expansion into the engagement, broadening their exposure, helping them build new skill sets, looking at a higher purpose in terms of how you incentivize staff. One size fits one. Let them set their own incentives or communicate to you what motivates them. That gives them a greater sense of buy-in or ownership, especially into a new initiative. And then aligning their involvement in that new initiative with their career goals. Okay. Remembering that in the accounting industry, the career ladder has really been replaced by a career lattice, I would say. So at this point, let me go ahead and just open up or turn it back to Jessica. I can answer questions that folks have, and I appreciate everyone's time. Again, we're going to kind of segue over to some Q&A now.
Okay, perfect. Lauren, if you wouldn't mind going to the next slide. Before we get into the resources and the Q&A, I'm going to go ahead and pull up our last poll question here. We'd like to just get a poll to see who would be interested in learning how other accounting firms are using ProfitCents to expand their client reach. During today's presentation, Lauren did use some of our reports and our industry data to identify some of those things. And so if you have some interest, please let us know. And I will go ahead and give everyone just a moment here to respond. Okay, we still have some responses coming through, so I'll give you just a few more seconds here. Okay, I'm going to go ahead and close the poll. Okay, and on your screen now you can see some ProfitCents resources. So we do have a page that has checklists, infographics, white papers, articles, case studies on our SageWorks site. Today we do have a white paper on how to find your industry niche. I know that Lauren talked a lot about identifying industry niches and niches within your firms, and that white paper is a good resource for that. And we also have a business advisory professionals group on LinkedIn that we encourage you to join. We have accounting thought leaders and then other accountants such as yourselves that are in there sharing best practices, how-tos, and tips. Lauren, let me go ahead and pull up the questions. If you have any questions, please feel free to enter those now, and I'll go ahead and have Lauren answer those for you. One of the questions came through when you were talking about how to identify your client base, and it asked, like on the opposite side, on the negative side, if you were to lose clients, what types of characteristics should you be looking at for that?
In terms of why you would lose clients or why not to go into an additional market?
It just says the negative side of these questions should also be addressed. An example would be clients lost. What are their characteristics?
Absolutely. I would say that that's definitely important. So for clients that we have lost, you know, what industries are they in? What was our fee structure? How were they brought into the firm? Maybe who was serving them in the firm? What services were they receiving? What were our channels of communication like with those clients? How profitable were the services we were providing to those clients as a firm? And I would say absolutely you want to look at the kind of side of the firm where you're not keeping clients and see if you can come up with a definition as to why that would be, because those may be markets that you want to really move away from in the future.
Great. Next question here is, what are a few easy ways to help clients further quantify the value of proposed service?
I would say, probably the easiest way to do that and something really simple and also directly related to what we talked about today in terms of helping them quantify value would just be through a simple what if, whether you actually, kind of have a what if analysis tool, whether it's through ProfitCents or elsewhere, but actually helping show them, we talked about your competitive advantage as a firm really lies in helping your client do one of three things or more than one of these: make money, save money, or add value to their organization. So can you quantify, can you show them through a what-if scenario, maybe a projection of their financials, exactly how you could help them control costs, how that would drive profitability, i.e. what would their margins look like and how would that compare to their peers? How would those stronger margins help to create a competitive advantage or put them in a unique position to do X, Y, and Z? And then maybe perhaps how could you help them in tightening their operating cycle? How could those changes that you're proposing to help them with impact their cash and cash flows? So basically identifying how you can strengthen an area of weakness and showing them a very conservative, or I'd say small change, would impact, again, something very specific like cash. And then taking a step back or looking at a bigger picture, how, let's say, collecting receivables faster, 3 days faster, would impact cash by this amount. Then you want to look at how that would affect their ability to accomplish whatever their bigger goal is. So the key is to really have an ongoing conversation or discovery process with your client where they are constantly communicating to you through some purposeful questions that you ask, what it is that is important to them at an organizational level as well as an individual level. So for every contact that you have in one of your businesses, the business clients that you work with, for every contact, every person that you work with in that business, you should have a working understanding of how they're evaluated at their job and what they're held accountable for. And every conversation that you have with them, everything that you propose to them, you should be able to directly tie back to, again, what it is they're trying to accomplish and how they're being evaluated on that.
Okay, great. I know it's 2 o'clock, but I have one last question here. Through your experience, what types of trainings or best practices should be set up within a firm to help staff members better identify client opportunities?
Okay, so that's a great question. I would say that it's important to, again, here kind of narrow your focus to expand your reach. So, not trying to conquer everything, but really, again, having firm members, specialize either by industry or by service area. And I think the biggest thing is, regardless of how your firm is structured, whether it is by service line or industry vertical, making sure that for the clients that those firm members serve, that they are constantly aware of and familiar with what's going on in their industries, and that they can answer those 3 questions we talked about earlier. What's going on in the client's industry? How does that create unique challenges or opportunities? And why is your firm uniquely positioned to serve the needs of those clients? I would say that, having, depending on how many industries that you focus on as a firm, having either a monthly or quarterly spotlight of an industry where you do internal training, maybe even looking at researching an industry using those 7 steps that we talked about. I think probably what most younger firm members struggle with, they can probably communicate fairly well the steps of an audit or whatever to a client and talk about what that particular service offering entails and what to expect, but they can't always translate that into client value. So helping those individuals understand a client-centric definition of value or how to ask better questions, I think is really the most powerful thing that you can do. So I'd say 2 things. Come up with a means for spotlighting or researching specific industries, and then come up with specific questions that those individuals can ask to those clients to engage them in conversation and initiate, again, that discovery or learning process.
All right, great. Thank you. Lauren, thank you so much for your presentation today, and thank you, everybody, for joining. You will be receiving an email from me shortly that will have a copy of today's slides and the recorded webinar, so that way you can refer back to it if needed or share with others in your firm. If you do have any questions, please feel free to reach out to us and let us know. But again, we appreciate you joining, and we hope you have a great day.
Thank you, everyone.